Ahoy there, traders. I think after my mess up last week, just make sure that we're all looking at the right, right monitor this week. Personality of a trader is the slide on the chart, on the screen. Hello, hello, Randall. Hello, how are you doing? Hello, Alan, Bal, Zeke. Hello, Giselle, James. Hello, Perry, Randall, Ruben, Vito. All the old hands here. Lovely to see each and every one of you. Right, well, hello, one or two people just jumping in. Hello, Scott. So let's dive right in. So the personality of a trader, I'm just going to touch on this briefly later. I think it's important. Well, I know it's important. And hopefully it just gives one or two of you a little bit of extra direction for your own trading. Nonetheless, as each and every one of you logs in, we've got a nice crowd of people. Obviously, the regulars here, nice and early, one or two new people. We've not called your name out, nothing personal, unless it is, in which case you'll never know. But nonetheless, my name is Phil Newton. We generally take a little look over my shoulder every week into what I refer to as production line trading. I try and systematize and streamline what I do as much as possible to the point where it is a production line. It's for selfish reasons, first and foremost, as we'll see in a moment, but that's how I tend to refer to this. Typical agenda, what we're going to look at today is swing trading, mainly on the daily charts. And session lasts usually for about 60 minutes, is being recorded. So if you need to step away and attend to something else, it will be available later today. We're going to look at some stocks, obviously, later on. But first, or prior to that, we'll be looking at the personality of a trader. Now, if you are new to these sessions, my name's Phil Newton. I like to spend as little time as possible at the charts these days. I've gone from one extreme to the other. 12 years a day trader, spending a lot of time at the desk. It's unhealthy. And then I've kind of swung to the other extreme. Yesterday, I've got a few extra pictures for my collection. I went flamingo hunting, which is code for me going to a zoo. Well, this bottom one, the jaguars here, absolutely amazing. I was literally 5 feet away from them. So part of my personality as a trader, there's a point to all this, part of my personality as a trader is it dictates the way that I trade is the point. And the way that I approach trading and investing is so that I can go and do these things, so that I can spend time away from the desk, so that I can recharge my batteries and generally just have a little bit of fun, because it's not healthy if you're just staring at the computer all day, every day. It's not my idea of a good time. Nonetheless, I love a good read. I love a good ramble. I've got an unhealthy obsession with flamingos. I don't know why. Generally, I love animals. I love going to visit zoos and have those types of experiences. A little factoid, a little random thing, and it absolutely blew my mind. There's no such thing as a black panther. I don't know if you can quite see it on the image, but if I just zoom, can we see that it's not the coloring on the image? It's actually the same pattern as the regular jaguar. It's just that it's got a deficiency, which makes it's kind of like the opposite to an albino. It's just all black, but the markings are exactly the same, just all in different shades of black. I don't know about you, but that blew my mind yesterday. But to actually see that up close and personal, again, this was I was about 5 feet away from these little kitty cats. With their humongous murder mittens. So anyway, that was my little adventure that I just wanted to share with you. As you can probably gather, I'm not a Wall Street guru. I'm just a regular guy. I like to have some fun, enjoy myself, and again, spend time away from the computer. That's what production line trading allows me to do. I've cracked the code on it. It's a systematic approach. It's an algorithm. It's a set of rules. It's a checklist. However you want to phrase it, it's just systematic trading in one form or another. And that's just the fancy way of saying I've got a list of rules that I follow and try not to deviate from. Again, for the last 28 years, I've been helping traders just like you get results by making the leap from knowledgeable trader to successful trader. And ideally, I want to do that in the shortest possible time. One of my motivations for doing this is I never had anyone to ask when I start out. I made every mistake. I learned the hard way, which is the trial and error way. And it was painful. It was hard work. It was frustrating. But nonetheless, looking back on my own personal career, is I completely and wholeheartedly believe that trading is a learned skill. I'm currently working with 4 people at the moment in an experiment with one of my business partners, and they know nothing, like literally nothing. Like today was their first day. We just said, hey, do you want to be a part of this experiment? And yeah, I'm kind of reinventing my own turtle traders, but they know nothing. They don't know the terms. They don't know the jargon. All we're doing is saying, this is the button that we press when these conditions happen. That's literally all we've done. And in 3 weeks, they're finding trades. They don't know the names of anything. But my point is it's a learned skill, and you can learn it if you simply follow the rules. Anyway, that's me. My name's Phil Newton, trader first, mentor second. I really enjoy doing it. If you're watching this on the recording, feel free to press pause. There's my laundry list of self-proclamations and accolades and all the fancy things. You know, you might have seen me on some fancy websites. All I'm trying to illustrate more than anything is this isn't my first dance around the dance hall. I've been doing this a while. And again, I'm not shy about admitting this, but just a commercial intent warning. I enjoy helping people as much as I can, but if you really want to get to grips with what I do have a program that is a system. It's your choice whether you want to be involved, if you just want to turn up to these free sessions. But at some point later on, I will be inviting you to work with me so that I can help you become a better trader, so that you can skip the 20-year learning curve that I had to go through, and you can just basically plug and play into a production line trading system. Again, I keep referring to this as that. It's not a fancy gimmick. I want it for me first. Again, I'm going to go into that in a bit more detail in a moment. But the 3 steps to the production line trading is mechanical scan. That is the part that means that I'm not flicking through chart after chart of charts endlessly all day, every day. I just want to be able to zero in on the best opportunities today. And it could be an indicator, a pattern, a setup. We just want the computer to basically do the heavy lifting at that point, so that we don't have to visually confirm everything. Because I don't know about you, that like there's 28,000 or so stocks on the US markets. I don't want to look at all of them all of the time. I just want to look at the best stocks today. And that's what that mechanical scan does. So we've got certain blueprints, certain repeatable patterns that I like to trade. That's what goes in that segment there. Then I want to visually confirm, want to look at the charts and basically just say, is this developing as I expect? Does it look like the blueprints that I've scanned for? Again, because the mechanical scan, it's not perfect. It never will be. So I want to have that visual confirmation. Does it look like the picture, basically out the textbook, or my version of my own textbook is, does it look like the picture? If yes, then I can start looking for my entries, my edges, my stops and targets. I want to know what I'm doing, when I'm doing it, why I'm doing it before I place the buy order, and also consider any management of the trade. Again, all of this is worked out before the trade, and all of this should take me about 20 minutes in a day. It's streamlined is the point. And that is what we're going to go through. So leading into what I want to discuss is, how do you get your production line? Firstly, use this framework. You know, if you don't want to work with me, again, I appreciate what I do is not for everyone, but you can take what you do need. You know, if you don't want to know the extra details, you don't want to know the specifics, but you just like the framework, use that framework. You know, mechanical scan, visual confirmation, tradecraft. You know, how am I going to scan for opportunities? How am I going to, you know, what's the exact pattern that I'm looking for? And how am I going to enter, exit, stops and targets, and all the things that go along with that? You know, if you follow that process, you're not going to go too far wrong. So how do you get that? And this is really, really linked to the personality of a trader. So the personality of a trader, it can mean a lot of things to a lot of different people, but what kind of sparked this direction for my little educational snippet this week is it's a scam. I saw lots of when the stock market sells off hard and fast, like it's done at the end of last week, which we called, I might add you, if you remember, we were talking about said big sell-off. But when things like this happen, it's scary. Everyone starts talking about that the stock market's a scam, it doesn't work, it's a load of rubbish. But every trader who said it's a scam has never seen a Green Day outside of a rock concert. So, other things that I've heard is this no lose trading bot looks, again, do the bunny fingers behind the scenes. It looks legitimate. If there's no lose in the title, okay, fair enough. It probably is a scam. I would walk away from those sorts of things. So just keep those things in mind. But a big part of the problem, it's not knowing what you want from trading. And let me clarify that last comment. Money is not the objective here. It is a byproduct of process. And you're all smart ladies and gentlemen that have turned up. Well, firstly, you're all here, so you all must be smart people. But money is a byproduct of process. It truly is. If you start a business, a real world business, rather than a trading thing, let's draw a parallel. If you started a real world business, you would have a system, a process, a business plan, a marketing plan. You'd have an advisor, a consultant, an accountant. You'd have a team of people to help you with the process of whatever it is that your business is, even if it's just a little shop on the high street or a highfalutin 300-person manufacturing plant, whatever that is, whatever it means to you, there's a process behind the methodology. And I don't know why people think that trading is any different. It is a business. So you've got to know what you want from your business. How do you want to operate your business? And that's what I mean by that. Now, if you run and operate your business successfully, a byproduct of that success is you will be rewarded monetarily, because that's why we're doing it in the first place. But it's not the objective, if that makes sense. Let me just pause there. Does that distinction ring true? I always worry sometimes because sometimes these things are a little bit abstract, but did that land? Did that make sense, that last part? That's the important part in this little message here more than anything. And yes, you've got to suffer through me slurping while I'm waiting for you to type. Thank you for your feedback, folks. Thank you. Awesome. Thanks, Randall. So this is what it means to me, that is essentially the personality of a trader. And it's basically what's right for you. It's a list of things that, I've kind of got my slides all mixed up a little bit here. What is a strategy? The personality of a trader means to me, it's a list of things that you like and don't like. That's all it means. Because I got to admit, I remember reading, and we're talking late 90s here, back in the day when I was a youngster trying to figure out the trading thing before I went full time at this. I was trying to understand that phrase, the personality of a trader. It's got to suit your personality. Well, what in God's green earth does that mean? All it really is a list of likes and a list of dislikes. And the usual example I give to try and illustrate this is, if you don't have time to day trade, why are you trying to learn how to day trade? It doesn't make any practical sense. Again, it's a random example. Again, and you can insert anything into that. But if you don't have time to day trade, why are you trying to learn how to do it? It may be that it works, it's successful, it's a proven strategy. I spent 12 years day trading. I know that it works. But you know what? I don't want to do it today. 28 years later, I don't want to do it. So it's not a case of it doesn't work, it doesn't make me money, because it does. But you know what? These days, I'd rather be doing something else. If you don't have time to do it, it doesn't make sense to do it. If you don't want to do it, don't do it. So this is what I mean by figure out that list of likes. Imagine that you're doing it, and then think that, what does it look like to you? I mean, to help with this, back into it. So start with the end in mind. If your idea of doing it is actually sitting in front of 12 monitors like it's a NASA space station, and you're pew, 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 and it's like it's an that's great. That's I've done it. But if that's your idea, then that's what you're working towards. And you can start looking for strategies that meet that. Now, everyone here is pretty much interested in swing trading. So we probably want a more relaxed approach. And certainly that's what I want. That's at the back of my mind when I've worked out my oops, no, what have we done here? There we go. Pressing all the wrong buttons here. That's what's at the back of my mind when I'm thinking about production line trading. I'm trying to figure out, what do I want from trading? I don't want to be sat in front of the computer, flicking through chart after chart after chart for hours at a time, trying to zero in to what may or may not be a perfect trade. It doesn't exist. And I'm just wasted hours today, yesterday, last week, trying to look for something that doesn't make sense. So that's what it means to me. And hopefully that is coming through in my kind of the way that I'm approaching this. So if you don't have time to day trade, why trying to learn how to day trade? So what do you want from trading? And just to help give you some guidance, and again, this is sprinkled through and maybe helps you understand why I trade the way I trade, why I call production line trading, because it's because of this. And there's probably more things. I was just doing this before we started. There's probably more things to it, but I want minimal screen time. I want to spend as little time as possible at the computer. Of course, that makes sense. Now, there's always going to be exceptions to every rule and every condition. So if there's weird stuff in the market, like when the market's crashing, I'm probably going to spend a bit more time at the computer. It's relevant. But even with this recent sell-off last Friday, Monday, Tuesday, the big sell-off, I wasn't really doing that much because the strategy had taken care of the stress, the anxiety, it had taken care of that weird thing. So that links into the second part, is I want maximum performance in any market condition. So minimal screen time, maximum performance. And it's a little bit of a balance. It can be achieved. Certainly, I am living proof of my own process. I also don't want to read boring company reports. It's not that reading fundamentals, the FA stands for fundamental analysis. It's not that reading boring company reports and trying to divine some sort of value doesn't work. There's a whole segment of trading and investing that involves doing that. It's called fundamental analysis. Warren Buffett is one of the more famous people for doing it and finding value investing. I'm not an investor. I don't really care who is the chief executive. I don't really care about any of that. My philosophy is I can swing trade and profit from the swings in up and down moves in the markets. And I can do that for up to a 2-year period. After that, I probably should be looking at the fundamentals. So I swing trade. So that influences the way that I trade. The way that I want to trade is I want to get paid at the end of the month or the end of the quarter from my trade ideas. Now, I can refine that. If I wanted to short-term swing trade, I could go down to a 60-minute chart. And this actually leads into do flexibility. I can speed things up or slow things down. So my production line, think about like turning a dial. I can speed things up or slow things down. So if I want to slow things down and get paid at the end of the year instead of the end of the month or the quarter, all that means to me is I should be able to apply the same strategy on a different time frame. And that's a very simple explanation to illustrate the speed up or slow down. The same strategy should be robust enough on the stock universe that I want to trade so that I can slow things down. If I want to get paid at the end of the month, have a more laissez-faire approach, I probably only need to check in with things once a week, once a month, really relaxed, great for the busy investor. You're kind of leaning towards that more swing/investment approach. Or I can speed things up. So what I can do is I can drop down to, say, a 60-minute chart and have 1 or 2 setups a week instead of 1 or 2 setups a month on, an individual stock that I may be evaluating. So that's what I sometimes refer to as get paid at the end of the week. And similarly, if I want to get paid at the end of the day, I can drop down to a 5-minute chart and get paid maybe by lunchtime. There's a methodology in the madness. So that's what I mean by speed things up or slow things down. I need a versatile strategy that works across timeframes. Also, it works on across markets. So if you actually want to apply this to crypto, I'm gagging by saying it, but you get what I'm saying. I've been looking at the crypto markets recently, the top 6 liquid markets. My business partner's kind of twisted my arm. But nonetheless, I can look at different markets. I spent the first 12 years trading futures and Forex, real currency, proper currency. So it's markets, the versatility in the market. And again, I can speed things up or slow things down, kind of skipping around the list here. I also don't want to look at the media, the madness of the minutiae and the bullshits of the mainstream media. I don't want it. All this does, looking at the news, looking at whatever Cramer is talking about or whatever the mainstream media is talking about, not just in the business world, I just find that reporting media doesn't report anymore. It wants to hype and sensationalize and make clickbaits. And all it does is raise my blood pressure. And I sometimes refer to myself as being happily ignorant. I'm intentionally ignorant on a lot of subjects. And I'm okay with that. If I want to go and investigate things, I will do it myself. But I am not taking the media's word for it, because who can you trust? It's not that I'm a conspiracy theorist. It just raises my blood pressure the way that if it bleeds, it leads. I don't think that's a good way to view the world. It's a horrible way to view the world, because all they're looking for is attention. So if you are going to look at the news and the media, think about it like entertainment. I'm certainly not going to make any business decisions based on what I see on these clickbait headlines. And probably the most important one, and you'll notice that the actual strategy side of things, it is actually way down in priorities. I want a checklist trading, call it an algorithm. It's a rule set, but I want that first. And that is what I keep referring to as production line trading. It's a checklist. That's an algorithm. It's a systematic approach to find, filter, and sort and execute trading opportunities. And the last one is why. Why do I want all of this? I've got Crohn's disease. There's periods of time where I'm not well. I get tired, I get fatigued. Sometimes I am like very, very seriously ill. Most of you will never know how ill I am some days, because I don't let it consume me. But at the same time, I still need to do certain things, either today or every other day. And a couple of weeks ago, I was not well. I was, feeling it, as it were. So I want a system that has those rules, that has that checklist trading. That's why I want this, because when I'm experiencing that, that's what makes it possible. That's why I want it. So I don't know what your reason is, but it turns out that many people like that systematic approach, that rule-based systematic approach, so that you can follow it. Because maybe you've got life, you've got family, you've got the day job, you've got kids. I know one or two people are getting back into kind of going out in the world now that lockdown's being relaxed and lifted in various parts around the world. Maybe you've got travel. Again, your life is different from mine. I'm just explaining why I wanted it. So ultimately, the point is I wanted it for me first. And this is what, firstly, production line trading is for me, but it stems from the personality of a trader. Me, in this case, I am the trader, and I'm just trying to understand what I want. Now, it may be that a lot of these things, you want all of these things. Maybe you want other things as well. But maybe your reasons would be different, but maybe we all want the same thing. And again, does that make sense? That help you understand how you can figure out what you want? When do you want to get paid? Again, money's a byproduct of process. We need a process, obviously. We want a strategy that makes sense. We want it systematic. We want to be able to follow it. We don't want to be able to be pondering and pontificating over, should I place this trade? It should just be a case of check, 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 trade sets up, the trade goes on, great, go and do something else. So does that make sense? Let me just pause there, and then we'll move on to the charty things, and we'll go and find some things to trade, and the markets will be opening in just a few minutes. But does that make sense, folks? I mean, just give me some feedback. Did that land? Is there a takeaway? Is there something that's kind of struck a chord with you just when I was ruminating on what I want from trading, so that it helps you with your understanding your personality of a trader? Again, we can go into a lot of detail with specifics like risk profile if we wanted to. That might be another thing that gets touted around from time to time. You might be more conservative. You might be more adventurous. I tend to deal with that side of it inside the strategy. So that's the only reason why I have not dealt with it as a list of wants. I deal with my risk profile as part of the strategy. If you're conservative, low position size, small number of positions. If you're more aggressive, if you're more adventurous, you might have turn that dial on the production line up. You might have more positions, you might have bigger position size, one, the other, or both. I just deal with that inside the strategy so that I don't have to think about it on a day-to-day basis. Awesome. I'm just reading back through the comments. Randall, awesome. Well, not awesome. No one likes to suffer from Crohn's disease. Ezekiel, Perry, thank you. James, excellent. Thank you for your kind words. Yes. In a weird twist, I always think of it, Randall, as a positive thing. Just a little bit of a squirrel moment. Crohn's disease, while nearly killed me several times over the years, it was the best and worst thing that ever happened to me. In a weird twist, yeah. It was just kind of one of those things. It turned me from that person that like, oh, I wish I could do something. I wish I had my own business. It turned me from that person that was always wishing and never doing. And then it kind of like kicks you in the pants, doesn't it? Gives you a little bit of a shake up in your life. When something weird happens, and I think everyone here has had that with the COVID situation. Everyone's had that life experience where, you know what? No one's going to do it for me. I best pull up my trousers, push up my sleeves, however you want to phrase it, and get into it and start making things happen for myself. That's what it did to me. It's just like, no one's going to do it for me. Like no one's going to ride up on a white horse and save me. You create your own opportunity. You create your own luck. If you want something, go and stick your flag in it and claim it for yourself. That's what it turned me. It stopped me from being that, oh, I wish I want, oh, I wish someone would. No one's going to do it for you. No one is going to do it for you. There's people that will help you. There's people that will help direct you, but no one is going to do it for you. And certainly I don't do it for my traders that I teach. It's like, I will guide you. I will navigate you. I'll show you what I've done, but you've got to go and do it. Ride on that flamingo. Absolutely. Awesome, folks. Thanks for letting me just get on that soapbox. Let's take a look at the markets. Ride upon a flamingo. That's funny. That's so funny. This is semiconductor, Tower Semiconductor. Oh, quick slap. This is one of the stocks that we looked at a few weeks ago. Classic sort of trade setup. We also looked at ADM, didn't we, recently? Again, in our AMD, not ADM. I always get them the wrong way around. AMD, Advanced Micro, blah, blah, whatever it is, devices. That's looking interesting. Again, we've had some great trades on this. Generally, the semiconductor sector is doing great. Again, just calling back to some stocks, some trades that we looked at. Again, buying the dips and all the rest of it. Let's go back to the market. Kind of getting ahead of myself. One of the things that, as you know, we always like to do is we start off looking at the indexes. Now, the market's just about to open. It looks like we're going to be just dropping down. Again, this is the futures market, so it's almost 24 hours, not quite 24 hours. But one of the things that we can see is, despite the green day yesterday and the day before, and the turnarounds moves, once again, we're seeing the markets move too far, too fast. It's maybe a comparative would be that, if we see the markets move down, down, down too fast, and then they do a complete U-turn up too fast, it's almost like being pulled over by the cops and getting a speeding ticket. Something is going to happen. The market needs to rest. It's unusual that we see fast moves up and down in a very short space of time. One of the things that I actually commented on in one of my insider communities is this behavior. Let me just zoom in. This behavior, it's very reminiscent of 2005 on 1 minute charts, when things like non-farm payrolls used to actually move the markets. And big news events like non-farm payrolls, they haven't actually rocked the markets for about 15 years. I wouldn't worry about any industry reports, sector reports. There's very few reports these days that actually rock the markets. Non-farm payrolls could send the Dow up 200-300 points. This is back when the Dow was 10,000, and it's 30,000 now, just for reference. Is it 30? Yeah, 35,000 now. Wow. So back when it was at 10,000, it would go up 150, 200 points, which is as a percentage is a big amount. Today's standards, not so much. It's all relative. But back when it would do it, so you would see things like this, price just wibble wobble around. Then you'd get that big sell off on the announcements, and then there would be some sort of revision 15 minutes later, and then you'd see it turn around. You'd see that whipsaw price action. We're seeing this on the daily charts on many of the indexes. So it's unusual price behavior is all I'm saying. It was wholly expected. The fact that we saw price, pretty much recover as fast is unusual. It's not out of character at the moment. We have seen it in the middle of the month. I'm expecting something like that to happen over here, where we've got that kind of almost a retest of the low. I think we would see that here on this occasion. It is entirely possible for that to happen. So that's what I would think would happen. Just because it's despite the fact that we've seen that V-shaped reaction recovery. There's that phrase again, V-shaped recovery. But yeah, it looks like it. Well, I believe it would happen like that, or maybe we get that again, that double touch that we see back in April as well. So I'm just thinking that might happen over here. Again, it's an opinion. It's what I think will happen. I can't trade that opinion. So how do we systematize our decisions ahead of the market actually moving? Again, one of the things that we do as a part of our production line is I'm just marking off the 200, the 50, and the 20 period moving average. That's what these three lines are. And it helps me have a frame of reference. And what that means is when you use something like a moving average, it helps me to put a framework over the chart. What it also does is it takes the discretion out. So you'll also notice I've got like two black lines here. They're trend lines. Now, trend lines are subjective because I can have my start point and end point at any time, just like Dow 3, GAN 3, Elliott wave theory. They're all great analysis tools, but they are subjective. Now, based on my conversation earlier, I'm trying to remove the subjectivity. So how can we do that in our production line? So if we're looking at the markets, we've got big separation between the moving averages, certainly the 250. Broadly, they're all going up. They're stacked 250, 20 on top of each other. So the trend is up. Now, visually, we can see that the trend is also up. So we're at the 50-period moving average right now. We're below the 20-period moving average now. Now, because they're quite close together, I'd probably want to be, based on my earlier comments, I can probably be more conservative. So when price goes back above the 20, I'm going to say that's my line in the sand. That's what I'm going to say. Okay, the trend is resuming. And until that happens, I'm just going to press the brakes. I'm just going to press pause on my trading activity. Because of that uncertainty that I had, I can start to mechanize the decision-making process. So let me say that again. I've got some opinions. I'm trying to remove my opinionated trading. How can I mechanize my decision? So I can say, okay, there's the 200, there's the 50, there's the 20. We know the trend is up. That's a fact. That's not in dispute. But what I want to do is, when can I start buying the dip? Essentially, this is very clearly a retracement in the context of an uptrend. The only thing that we never know is how deep that retracement will be, how fast it will be, and when it will start to resume the upsend. Because I'm not buying the dip, I'm getting involved on the resumption of the trend. And again, it's a little bit of a finicky point to make, but nonetheless, it's a very important point to make. I don't want to get involved on the way down too soon. So I'm going to wait for price to turn around and prove that, it's on its way back up. So I can just use these moving averages to say, when it's above, when it's below, I can start to be involved. Now, I could say when it goes back above the 50, I'm going to resume my trend trading activity. I'm going to resume my dip buying process that we go through most weeks. And again, because of my viewpoints, again, I think the market's going to unfold like this. It's my viewpoint. It's my opinion. It's my analysis. I've been looking at the markets for 28 years now. I think I'm entitled to that opinion. But rather than try and worry if it will happen, when will it happen, could it happen this time? What if it doesn't happen this time? The last 3 times that prices retraced in the middle of the month, which again, we nailed, by the way. And we were talking about the sell-off last week and the week before and the week before that. And we got the dates exactly right. Again, it's a cyclical, repeatable process. So what if it doesn't happen again this time? What if that doesn't happen because of the speedy recovery the last 3 times? What if we got a 4th speedy recovery? Well, I've got a line in the sand to say, you know what? If it goes above the 50, if it goes above the 20, I can resume. But let's apply a little bit of a conservative view. I'm going to wait for that last line in the sand, the 20-period moving average. When it goes back above that, I've got nothing else to wait for. I've got nothing else to wait for. If I want to be a little bit more adventurous, I can say, you know what? We're at the 50 period. We're going back above it. If I want to get involved, I could certainly do that. Amy, I've just seen your question. Does that answer your question? I think I answered it by accident and then I just saw your question. We're above the 50, below the 20. We could apply the same process above the 50-period moving average is all I'm saying. But because I'm a little bit uncertain, because I'm uncertain, I'm human. I'm just like everyone else. I mean, despite the fact I've been doing this for a long, long time, I don't know what's going to happen tomorrow any more than you, me, or the next person. And anyone who tries to convince you that they do is talking shite. I don't know what's going to happen next. Now, I've got an expectation of what could happen because I've got 28 years experience. I've seen these things unfold many, many times before, but it doesn't mean it's going to happen again. There's no guarantee. So what I need to do is, I need to take that opinion into account, run it through the production line. Let's do it. So the production line says mechanical scan. Okay, I'm looking at the chart, so we don't need to mechanize the process. This is the index. Now that we're looking at visual inspection, 20, 50, 200, and I'm just looking at where is price in relation to the trend. Well, firstly, it is a trend. It's going up. It's come below the 50. It's below the 20. And I can start to say when it goes back above the 50, I can be a buyer. But because of my uncertainty, I can apply a conservative stance. I can wait for the 20 period to be breached and say, you know what? I'm a little bit uncertain on this occasion. Let's wait. But as soon as it goes past the 20, the market or the trade opportunity that you may be looking at, because the same things apply on any stock, any instrument, any time frame, as we mentioned earlier. I've got nothing left to wait for. So when people say, I'm just waiting for confirmation, don't just stop at, well, I'm just going to wait for confirmation. Like, define what confirmation means to you. Does that make sense? So this is what I'm saying. Like, I'm uncertain. I think there's going to be this sell-off, rally, retracement. I think that's going to happen over here. It's an opinion. I can't trade an opinion. It's not something that I can put into the process, but I can mechanize the way that I use that information in the production line. Does that distinction ring true, folks? I think it's an important distinction to make here. I've got a framework that I'm using to make decisions so that I take the uncertainty out. Now, more importantly, when something similar happens again in the future, I can reapply the process. So all we're trying to do is turn everything into a series of yes/no questions. Has this happened? Well, despite my opinion, despite my viewpoints, I'm still going to wait for those triggers to be met. Now, let's run through the scenario. So let's just say that what I think will happen happens, and price sells off for a couple of days and then comes back to that prior low. It does that sell-off rally, which is where we're at, and then it comes down and makes that retest. So it does that pattern over here. That's what I think will happen. No guarantees. So we've got the eventuality. Well, what if it doesn't happen? Use the 20-period moving average. If it goes back above there, there's nothing to wait for. If it does unfold, if this happens the way that I expect over here, then what I can say is, okay, now what I think has happened has come to fruition. I can bring my trigger line down to the 50-period moving average and say, you know what? I can start to be a little bit more adventurous. I can start to bring my trigger to be re-involved in dip buying opportunities a little bit lower. Now, in this case, on the S&P, there's not much difference between those two levels. But nonetheless, it is a decision that I can start to apply with consistency. Does that next part of the process make sense? I'm trying to give myself choices, decisions, definition on my viewpoint. So just because I'm applying discretion in this analysis, I can run it through a algorithm, a decision-making process. I can run it through the what-if machine. In this case, my conservative view is price goes above the 20-period moving average, I can start to resume dip buying. If my opinion unfolds the way that I think it unfolds, then I can refine my trigger to be a little bit lower. And what if price sells off? What if that does happen, but then something new happens? Then the other scenario is, well, it carries on selling off and goes counter trend essentially. There's going to be opportunities that all those sell the rally and a downtrend opportunities will start to unfold. But I've got it covered now. All we've done is we've thought about the three things that can happen. What if the stock goes, or this market goes up? What if the market goes down? What if it goes sideways? And the reality is what if it does a hybrid? The hybrid being those two. That's what we've just focused on. If it goes up, if it goes kind of up and down a little bit, creates that pattern that I was expecting. So if it goes up or sideways, hybrids, that's what we're saying. Then I've got it covered. And then if it does go down, I've got it covered as well. So we're only ever thinking about three things. What if the market goes up, down, or sideways? And my production line, my series of questions that I'm asking myself is, when am I going to get involved? Well, it's below the 50-period moving average. Let's just wait. Is it an automatic buy when it goes back above the 50? Well, I'm a little bit uncertain on this occasion. So let's wait. When am I going to wait? I'm going to wait until it goes back above the 20. Okay, there's not much difference in it, but it might just give me, there's nothing else to wait for at that point. And it just gives me that certainty that, okay, I should be involved in the market. If I'm going to buy the S&P futures, there's no reason for me to not buy them as price goes above that last line in the sand, that trigger point, if you like. Does that make sense? Again, we're trying to systematize the decision-making process into what am I going to do in those three scenarios? Let me just pause there. Oh, quick drink. Thanks for your comments. I think everyone's on the same page. Cool. Let's go and look at some stocks. So we know what we're looking for. Again, we've spoken about the trend in many sessions. Let's just quickly revise, because I appreciate there's one or two new people. We're looking for a blueprint. Let me just go back just a second. Blueprints. So we're going to do move on to the stocks side of things. Look for something. We're going to look for a visual confirmation, and then we're going to look for a trade. Now I'm going to show you what I'm looking for first. Then we're going to go and scan for it. So you just need to be reminded of, like, what are we looking for? What's one of the blueprints? Again, buy the dip, you've heard me mention it. So let's just go and quantify what that actually means. Now, this is Twitter. This is our example. We've been following this all year so that you can see what we're looking for. Now, firstly, the average prices need to be crossed. It needs to be in that trend for at least 40 days. Then we want to know that price is actually moving up. So we're going to look back over the last 60 days and basically say, are we up as a percentage? Double-digit percentages, just to keep it simple. So if we're up in the last 60 days, that's what we're going to do. Now, what we're interested in is the fourth step. We want to try and find when price is dipping. And unsurprisingly, the market is currently in dip mode for many stocks and opportunities. So we're looking to try and find a price in a dip. So we know that the three trending criteria are met. So we don't want to buy the rally. No one buys the rally and lives to tell the tale. We want to buy the dip. So we want to wait for those retracements. So the two retracement criteria are below the 20 or below the 50-period moving average. There's the 20, there's the 50. Again, I'm showing you historical. And then we're going to go and look for, well, we've actually got a live one on Twitter right now, actually. And then the second thing is we could also look for, it needs to be down 10% in the last 10 days. It's one or the other. It could be both. And that's what these yellow boxes are. Again, we've been following this all year. One of them didn't. So what you got? 1, 2, 3, 3, 4, 5 didn't work. We've got 6 here. This is the last trade, but we've got a brand new one that's developing right now. So we know that price is trending. Well, we know that price is trending. We're going to do that scan over in the watch list in a moment. So we're going to do that scan in the watch list in a moment. And let me just get my best trade, best list here. There we go. Let me just put Twitter, TWTR. Okay, so what we've got here, so there's Twitter on the left in the watch list. So the average price crossing over is right there. I can see that information right there in the watch list. That it's trending up is what it's telling me. And it has been for 303 days. So it meets that we've been in a trend for at least 40 days. It's been in a trend for 300 days. Great. That's exactly what we're looking for. We want to then say, okay, where's price in relation to the moving averages? We want to know if we're above the 200. Just bear with me, folks. I just pressed the wrong button. We want to know if we're above the 200, above the 50, and or above the 20 period moving average. That's what we want to do there. So we can do, again, all of that over here on the left. I can look at the 20 period, the 50 period, and the 200 period. Right now, they're all blue because yesterday price closed above the 50 period moving average. It closed above the 20 period moving average, and it closed above the 200. But for the first time, it's back above the 50. So that's what we see here. And that's why we've got blue, blue, blue all the way here. Trend is up, and we've got that in trend for our minimum criteria. So now we're looking at this chart. Again, just showing you what we're looking for. Visually, we can see that that's going up. So we're going to do that scan. We're going to look for that in step number 1. So we've just shown you what it looks like, visual confirmation. So I'm showing you with the benefit of hindsight. That's what we're doing. We're now going to go and look for those scans. But now that we're, to be fair, now that we're looking at Twitter, it is going up visually. It meets that criteria. It has been dipping multiple times in an uptrend. Again, rally retracements. Again, it's multiple times in an uptrend. It's now gone back above the 50 period moving average. It could be resuming its uptrend. So that can be a buying opportunity. The line in the sand is going to be about $66. So let's go and look for it. So we want to find ideally a stock that is dipping in an uptrend. It's in that yellow phase. So we can do all of that over here on the left. So let me just actually turn the chart off for a moment. Again, the chart is intentionally blank. And what I want to do is I want to do that scan. I want to look for, does it look like Twitter over here on the left? Now, one of the things that I can do is I can just sort which are bullish trends and which are bearish trends. So did you see what I did there? Did you see what I did? All I did was I clicked on that column, just like a spreadsheet, and it just sorted them. These are the bullish trends and these are the bearish trends. And now I can basically do the same again, sort the days in trend, because remember, I'm looking for stocks that have been in a trend for at least 40 days. So that's what this number is doing. So some of these bearish stocks, they're not quite there yet. So these are all in a bearish trending state, but they've got 5 days, 7 days, 11 days. And one of them's 39. So Monday, that is going to be ready for me to evaluate. Cool. That's what we're looking for. But until then, I don't need to worry about it. Now, what is good is we're starting to see lots of two-sided market movements. So we've got a nice, can you see we've got a balance of bullish trending opportunities? They're not all ready yet, but we're starting to see a balance of bullish and bearish. And that's the market is finding some equilibrium, I think. The individual stock opportunities are finding some equilibrium. And that means that we can start having a balanced portfolio, because that has been, for, as most of you know, on my mind for most of this year. Having that balanced portfolio, to me, the simple solution is to have a balance of bullish opportunities and bearish opportunities. And we're starting to see some of those come good. And again, if we looked at the wider stock list, there's plenty of choices. I'm just focusing on my top tier stocks for the moment. And again, I can sort the stocks relative to where price is relative to the moving averages. So again, I'm just doing the same thing. Is it a bullish? Is it bearish? I'm just sorting all the red, blues. So here's the trending stocks that are trending and are above their moving averages. The trending stocks that have dipped in the context of the trend and are below the 20 period and the 50 period moving average. So I've got several candidates that look interesting. Now, as there's only a few, let's just go and take a look at some of these stocks. So Apple, for example, it's saying that it's dipping in an uptrend. We're up 7% in the last 60 days. That's what that number there is saying. It's been in a trend for 600 or so days. We've got a bullish trend. It's above the 200, below the 50, below the 20. And now we're looking at it. We've just clicked on it. We can see that we have trending opportunity. Now we're looking at the charts. We want to look at the last 12 months. That's what we've done here. So we've scanned and said, you know what, Apple looks like a good candidate. Let me just highlight it again on the Apple looks like a good candidate. I've just highlighted the line below so you can see the line above. So I can do that on the watch list. And this is the bit that I was talking about earlier. I don't need to flick through every chart every day, all of the time. I can go and zero in on the best candidates, the stocks that are dipping in the context of a trend. So now I'm going to go and look at Apple and say, visually, now that I'm looking at this chart, is it doing what I'm expecting to see? I'm expecting to see a retracement in the context of a trend. Again, over here, we've got it going up. The average prices are kind of flip-flopping around. We've got a range, and it looks like we've got price resuming the uptrend over here. You know, it's breaking to new highs, as we can see. So let me just zoom in so we can see some detail. Again, as you can see there, I've already got a little trade, or I've had a little trade on there, thinking about a new trading opportunity. So we've got price retracing in the context of the trend, as we've already established. 200 is there, 50 is there, 20 is there. The 20 and the 50 are so close together, I might as well just say, you know what, my line in the sand is $150 and just be conservative for the reasons that we mentioned earlier. So when or if price goes above $150 on Apple, again, just being conservative, then I can start thinking about looking for my entry. And then we can go on to step 3 of the production line, which is looking for entries, exits, stops, and targets, which, as you can appreciate, is a little bit beyond our limited time that we have today, and the sort of thing that I would normally go through in a lot of detail with my traders. But nonetheless, we can find a trading opportunity relatively quickly. So it's not that I'm going to place that trade today. I'm going to wait for my trigger to take action, and then I'm going to place the trade. So it's not no, it's just not today. But you know what? This could be soon. Let's go and take a look at CLF. So similar thing here. We're expecting to see a trend. We're expecting to see a retracement in the context of the trend. There's our trend. You know, visually we can see it. It's a little bit sloppy, a little bit messy, but nonetheless, we've got dips in an uptrend. Again, we're just going down to the 20-period moving average. I would be waiting for it to go, guess what, back above the 50. The 50 and the 20, they're right on top of each other. So just wait for price to go back above the 50-period moving average. That is my confirmation. There's nothing else to wait for when that happens. That's as conservative as I can be. So again, it's not no, it's just not today. But you know what? I'm prepared for the eventuality that these things are going to happen. Domino's Pizza. Again, now I'm looking at the chart. Again, I'm just taking the trades off that segment of the watch list over there. So that's why I'm choosing them. I'm just going down the list. So I've got 5 stocks to look at. It's in a trend. It's dipping in a trend. Wait for price to go back above, well, let's say the 50-period moving average. Let's stay conservative for the reasons that we mentioned. We don't need to be aggressive. If we're going to see a trending opportunity, trends generally last for, you know, many, many days, many weeks, many months. So don't worry about getting in at the absolute pinpoint bottom of a retracement. it's not going to matter a great deal. If you're in 10 cents sooner than the next person, we're looking for dollars, not dimes. So don't worry about trying to finesse and fine tune and get in sooner than you would like for fear of missing. You're never going to miss the move. You're never going to miss it. What do I think of FedEx? I'll take a look at that in a moment. Hershey's, again, let's take a look. Oh, surprise, surprise. Leave the drawings on there. We've got a dip in an uptrend. Dip in an uptrend. Again, I'm sure you can see the logic now. It's going up by the dip. If there's going to be a good trend, this looks like it's got legs. It could move quite nicely. MT. Lovely trend. It's moving into a little bit of a consolidation, so we could look at this as a range reversal. Nonetheless, if you weren't sure, let's play conservative. If it goes back above $34, this looks interesting. Starbucks. Visually, we can see it's going up. It's in a trend. We can buy the dip. We can wait for price very simply to go back above the 50 and to resume that uptrend. We've now got a mechanical process to look at 2, 3, 4, 5 charts. What's it doing? Is it a today trade? No, come back tomorrow. So I've got 1, 2, 3, 4, what have we got? 3, 4, 5, 6 charts. Why 6? For all 6 look great to me. I'm waiting for price to create a trigger for me to take action. So it's not that I'm going to place the trade today. I'm going to come back tomorrow, or in this case, Monday. I'm going to wait for that conditional entry trigger to be met before I place the trade. Does that make sense, folks? Again, buying the dip doesn't automatically mean to buy the first red day that you see. You're waiting for certain things to happen, but it becomes very mechanical, and when you've got a checklist, when you've got a process, you've just saw, it's very quick to actually just zero in. Here's 5 or 6 stocks that look great. Again, I'm not placing them today, probably going to be placing them next week. If the market is genuinely turning around, then I'll be a buyer next week. But I don't need to worry about it today. So this means that my trading routine for the day, I've done my due diligence, I've checked for new trading opportunities. And you know what? Probably don't need to worry about a new trade today, but I've got 6 stocks that look great for next week. Cool. FedEx, FDX. Awesome, James. Thanks for your comment. It will be recorded. I've got a few minutes to go. James just mentioned he needs to pop off. Really thrilled that you enjoyed the session, James. Question from Amy. What do I think of FedEx? Crap service. Generally speaking, not the best company in the world. Is it them that have got if you absolutely have to get it delivered by tomorrow, don't use us. Okay, let's run the gauntlet. Mechanical scan. James said, sorry, not James. Amy said, go and take a look at FedEx. That's what Amy said. So that falls under the mechanical scan. It could be that you heard an eBay advert on the radio, or McDonald's advert, or whatever it is, or a FedEx advert, whatever the thing is. There's going to be a mechanical reason. Okay, this is a little bit whimsical, but it just illustrates the point. I'm not looking at every chart every day, hunting for opportunities. I'm waiting for them to come to me. And maybe you did hear an advert. In this particular case, it's Amy said, you know what, Phil, can you just take a look at FedEx? Great. That's my mechanical scan. I wasn't looking at it. I wasn't looking for it, but it came across my desk, essentially. Now that I'm looking at it, I'm going to visually confirm one of my 6 money-making blueprints. So what's it doing? What is the trend, first and foremost, is the next thing. So let's look at the average prices. Average prices have just crossed over. There's the 200, there's the 50. So that's a brand new crossover. That looks like about 20 days in trend to me. Again, remember, I'm looking for 40 days in trend, brand new. How do you know that, Phil? These squares on the grid, they're all 1 month or one trading month, which is about 20 days. So I'm approximating. So 1 square, we've been in that trend for 1 square. So I'm looking for 2 squares. It's not in that trend for 40 days. This is a wait. Again, it's not no, it's just not now. And it's probably not even next week. I don't need to worry about it right this moment. Does that make sense? So I'm done my visual confirmation. What is the trend? Well, the average prices are pointing down. Visually, I can also see that, it looks like it's in a little bit of a range. So there's a little bit of a conflict between what I'm expecting to see and what's actually happening. So it's weight situation. It's not a trade that I need to worry about. I can come back next month for FedEx. Again, why next month? Because I need to see that average price trend, the average price crossover in trend for 40 days. For me, it's come back next month. Does that make sense? Awesome. And I think this is a good place to land, actually, a good place to finish off. This just illustrates when you've got a checklist of rules, it's FedEx. Should I trade FedEx? No. That was the question. Should I trade FedEx? The strategy said no. It's not never, it's just not today. The strategy said wait a month and then reevaluate. Did everyone get that? The strategy said wait a month. Why a month, Phil? Let me just go back. Condition number 1 for a trend, it needs to cross over. Condition number 2 for a trend, it needs to be in trend for 40 days. It's only in trend for less than 20. So I need to wait another month. So it's not no, it's come back in a month and see if we can carry on with our production line. In this case, it's going to be a sell the rally in a downtrend. So I want to see price rally back above the 20, back above the 50, one, the other, or both. And then I can sell the rally in a downtrend. That makes sense? Cool. Great place to finish. Where's my slides? There we go. So that was our production line. That's how we apply it in real time. When you get used to it, it's a very simple process. It is a checklist. Like with all things, they take a little bit of time to get used to. I am obviously a product of my own system, but all systems are worth learning. Again, what I often compare it to, it's like learning how to drive. When you first learned how to drive a car, a vehicle, it seemed complex. It seemed overwhelming. There was a lot of things to remember. But the reality is it wasn't complex what you were doing. It was just there was a lot of things because everything was brand new. But now when you think about your driving experience, maybe it's several years, maybe it's decades later, your driving experience, you probably don't think about it. It's second nature. It's like breathing. Awesome, Amy. Thanks very much. It's like breathing. So it's not that it was complex. It's not that it was difficult. It's just you had to learn quite a few things to make it to the point where you are today. And trading's like that. There are things that you need to learn. There are some things that you have to get right and have a good foundation. And then it becomes easy. Then it becomes easier. Then it becomes second nature. As you just saw, it takes very little time, very little effort to go through a process to say, should I trade FedEx? No, it's not no. It's just not now. It's come back in a month in FedEx cases. So hopefully that just makes sense. When you've got a process to follow, it becomes very easy to ultimately follow. Now, I promised each and every one of you earlier that there was some commercial intent. Again, if you want some extra help, I've got to admit, I enjoy these free sessions, these open house sessions. Most people do get a lot out of it. I know many people who have made trading work for them just from these free sessions. So I'm very conscious that I, go right up to the bone. But sometimes some people need some extra help. You might want to learn the specifics of what I'm doing and what I teach all my traders. And if you want some help with that, then the best way to learn how a portfolio is managed is by seeing a portfolio being managed. Again, Randall's once again, I think you're just commenting to me actually. Let me just take a little screenshot. Randall, thank you very much for your kind words and ongoing support. It really is, again, unsolicited and very much appreciated. Last week, you said some very kind words as well. Excellent in every way. Thank you very much, Randall. But yeah, the best way to learn how a portfolio is being managed is by seeing it being managed successfully. This is what I try and do. I try and lead by example and show you under the hood of what I'm doing. Right now, I'm offering group mentorships. I do have time for one-on-one students. I think I can probably do one more before the end of the year. So if you are interested, let me know. Over the shoulder group mentorship, we do live sessions Monday and Wednesday. We have a quick start blueprint training so you can learn the process in the shortest possible time with quite literally bite-sized trainings. If you have a knowledge gap, then we've got a deeper dive version of the training. But the quick start is essentially to make it work. Show me how to, again, to use the driving metaphor, just show me how to drive to the shops, Phil. I just need to know how to drive in traffic around town and go and do some daily errands and come home safely. That's what I'm showing you how to do. You don't need to know the internal workings of the combustion engine to drive to the shops. In trading, you don't need to know everything to make it work. So that's what the blueprint training is. It's just what you need to know to make money today. We've got a decision tree, basically a handy checklist of all the things that I've just been going through today. That's what I was referencing behind the camera. You know, what do I need to do to find the trade? Again, like the FedEx example, should I trade FedEx? It's this, 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 and this. And the answer was no, come back next month. When we're in a trade, we want to know what we're doing, when we're doing, and why we're doing it. It's the rules, the secret sauce that makes it work. The real secret to success is keeping the money that we make. So we want to know our entries, our exits, our stops, our targets, and the in-trade management system. I've got quite a unique way of managing and hedging positions at the moment. That means that I don't generally care which way the market's going. I'll be making money as long as it's moving. I'll also show you what I'm trading as I'm trading it with the exits, and stops, and targets, not so that you can use it as a signal service, just so that you can see in real time what I'm doing and how this process, how this system is applied with all the portfolio adjustments along the way. And obviously you can plug and play into my portfolio the best stocks with the best strategy, the best performance. I email some samples out to each and every one of you so that you can see what I'm trading. And again, unlimited support whenever you need it, you've got it. So if you'd like to join what I believe is one of the best training programs, it's the fastest and smartest way to learn how to trade, is to quite literally follow in the footsteps of someone who's doing it. So I've been doing this for 28 years, as we saw earlier. And if you'd like to participate, all you need to do is go to AntiVestor.com. Let me just type a link, AntiVestor.com. Just follow the process. Just follow the steps on the screen. You'll be asked to, oh, here you go. Just go to AntiVestor.com. You'll be asked to fill in your email, and then you'll be taken to, it's almost like I prepared it today. Just a happy accident. I had all these open. If you think of this page, there's some extra information. If you want to know the specifics, the details of what we're doing on a daily basis, you can scroll down there. You can see all the process and some of the results and some student success stories and some examples of what we're doing there. It's all on the screen there. And if you're ready to rock and roll, let's enroll now. Send me a message and we can hop on a quick call. And if you'd like to talk first, then again, just click on the Let's Talk button. The fastest way to get in touch with me, as some of our insiders are doing right now, is just to send me a message. Just come into my Slack community. There should be a link in all the emails that you receive from me, and just click on the Phil Newton there, and you can send me a direct message. You know, a few people are doing that right now. But nonetheless, that is my invitation for you to come and work with me. If you want to learn in the smartest, fastest possible way, and learn my production line trading system, then please feel free to do so. Just go to AntiVestor.com and you'll be able to get some extra information about that. So with that said, folks, I think that's a great place to finish. Again, thank you for each and every one of you for spending some time with me today. I always fully appreciate that we could always be doing something else with our time, and it truly is appreciated that you decided to spend some of that time with little old me today. So thank you very much for your time. Thank you very much for your attention. And as always, thank you for getting involved. I love it when everyone gets involved with the questions and the comments. It just makes it all, certainly from my point of view, just a little bit more enjoyable. So thank you, Adrian, Alan, Ezekiel, Giselle, Ian. Hello, Ian. I haven't spoken to you for a while. Nina. Are you new, Nina? I've not noticed your name. Perry, Peter, Randall, of course. Hello, Randall. Ray, Rodrigo. We've not spoken for a while, Rodrigo. Ruben, Steve. Hello, Steve. I've noticed you logged into the wrong room earlier. It's the weekly one. I got a little notification. And Scott, of course, and Vito. So everyone who stayed to the end, thank you from the bottom of my heart. Make sure you have a wonderful weekend, and I will see you all at the same time, same place next week.